Let's dig a little bit deeper into the nuts and bolts of a fixed indexed annuity. So there are several moving parts with respect to a fixed indexed annuity as reflected on the annuity contract's illustration. So let's give you a better understanding about what those moving parts are and what you need to focus on. Are you sensing another one of those videos? What is the value of a fixed annuity? Well, if you are, you're probably correct. By the end of this video, I'll give you the facts so that you can make an informed decision about whether a fixed indexed annuity is the right fit for your retirement portfolio. Hi, my name is Darlene Hartman. I'm a CPA and founder of D. Hartman Consulting, LLC. For the best retirement annuity advice, subscribe to my YouTube channel and hit that notification bell so that you can receive notices anytime I post a new video. Let's start by redefining what a fixed indexed annuity is. It is a fixed annuity with a call option on a market index, such as the S&P 500. So just as a reminder, you are not directly invested in stocks or bonds by holding a fixed indexed annuity, nor are you making a direct investment in a market index. Market gains from an index are credited to the fixed indexed annuity over a specified period of time as defined in the annuity contract using the interest crediting methods, the rates and methods of which are defined by the annuity carrier. So those interest crediting methods include cap rates, participation rates, and maybe even a combination such as participation rates with a spread or margin. So I want you to remember that the gains credited from the index to your fixed indexed annuity are limited by those interest crediting methods. Now, with respect to negative market returns from an index, so you are credited 0% because there is a 0% floor on your fixed indexed annuity. So you can say bye-bye to those market downturns with respect to amounts allocated to your fixed indexed annuity. If you added an income rider or a long-term care rider to your fixed indexed annuity, there is an annual fee typically associated with both of those riders, and that fee will be reflected on the illustration. The accumulated value of annuity, also referred to as account value or contract value on the illustration, is the culmination of several parts. So you first want to take the summation of the amount of premiums that you pay into your fixed indexed annuity, and then you want to add any market gain that is credited to your fixed indexed annuity over that specified period of time. From that summation, you now need to subtract the amount of withdrawals that are made from your fixed indexed annuity, and that would include those guaranteed income benefits that you can receive from a fixed indexed annuity. You also need to subtract if you have any annual fees, and those typically come from an income rider or a long-term care rider that is added to your fixed indexed annuity. Now, the account value closely resembles the amount that is shown for the death benefit, and the death benefit is the amount that the beneficiary receives at the time of your passing if there's any assets remaining on your fixed indexed annuity. So that's it. Pretty easy, right? So why are there so many other columns on the illustration? Leave me a comment in the section below and let me know what information you think I haven't addressed so far. Also, if you're enjoying this video, be sure to give me a thumbs up, subscribe to my YouTube channel, and hit that notification bell so that you can receive notices anytime I post a new video. Now I'm going to address something that I haven't talked about since my videos on deferred income annuities, and that would be the surrender charge. So the surrender charge is the fee that you will have to pay if you exit or cash out of your fixed indexed annuity in the early years of the contract. There should be a schedule in your fixed indexed annuity contract that will show you how many years that surrender charge period is, in addition to the amount per year, of which that amount will decline with each passing year in your fixed indexed annuity contract. So the illustration is going to give you a column for the account value and another one for the cash surrender value. and the account value will be higher than the cash surrender value during the surrender charge period. But the differences between those two columns will slowly reduce and then eliminate at the end of the surrender charge period. Now, if you decide to exit or cash out of your fixed indexed annuity during the surrender charge period, even though the account value is higher than the cash surrender value, you will only get the amount that is reflected on that schedule for the cash surrender value. I saved the most controversial topic for last, and that would be those upfront bonuses that annuity carriers are offering to those who are purchasing fixed indexed annuities. So if you pay a $100,000 premium into a fixed indexed annuity, an annuity carrier may offer you a bonus, let's say in this example of $5,000, bringing your account value in the first year to $105,000. So what that means is the market gains from the first year that are credited to your fixed indexed annuity are credited based on the value of $105,000 rather than $100,000. Now, I want you to keep in mind that even though it sounds like free money, be sure you know what fees you're paying on your fixed indexed annuity, because the annuity carrier may be charging you a fee to receive that upfront bonus. So what are you solving for in obtaining a fixed indexed annuity? If it's those guaranteed income benefits, money that you cannot outlive in your retirement if lifetime income, what if I told you that that upfront bonus may actually reduce the amount of guaranteed income benefits that you receive in retirement? So what's more important to you, those guaranteed income benefits or that upfront bonus? So what I suggest you do is when you're looking at a fixed indexed annuity, be sure to get an illustration for one that has a bonus and compare it to one that does not offer an upfront bonus, and see which one will enable you to maximize those guaranteed income benefits. If you're interested in obtaining a fixed indexed annuity for your retirement portfolio, for those guaranteed income benefits that it can provide you, in addition to certainty, financial security, and even happiness in your retirement, be sure to click the link below to apply to become my client. Also, if you enjoyed this video, be sure to give me a thumbs up, subscribe to my YouTube channel, and share it with your family and friends. Thank you for watching. Let's get the conversation started on how you can live your best retirement while not outliving your money.